Hello and good morning. I welcome you to the morning meeting today on Tuesday, the 27th of February 2018. This is Jens Klatt speaking, exclusively presenting this for me to you here for JFD Brokers as the Global Head of Research and Education. So we want to have a look, as usual, at the markets, the developments. Right now, I can say, well, price action all in all is quite, unspectacular. So not sure whether this will change or not. We have Powell's semi-annual testimony today in front of the U.S. Congress. Not sure about the U.S. Senate too today. There was a change somehow. Well, to be honest, I mean, I'm not even sure whether this will play a big role at all. We've seen Janet Yellen holding these testimonies several times in the past. Nothing really happened. Even though Jerome Powell is the new, by the way, Jerome J. His name is J, right? Not Jerome. Yeah, it's J Powell. Sorry, I don't know why do I say Jerome Powell? So there is a Jerome Powell here in Google. Let me just have a look. Oh, it's his name. Yeah, it's Jerome Powell, but the short version is J. So both are correct. Okay. Nevertheless, so the thing is that all in all, I think, impulses won't be so huge for the markets. And so not even sure whether we can make something really spectacular topic today. Nevertheless, I want to give my impression on the performance of the DAX mainly here, and share some thoughts which were already brought up by someone in the German trading community in the morning in my trading chat box I run on the guidance desk. So you probably have heard about this, even though it's only a German-speaking channel here. And he mentioned something you can definitely see, not just feel, but see. There are several days in the past now that there was selling pressure in the German equity markets, and the DAX especially. So here, for example, that was European trading hours. That was yesterday, European trading hours. That was on Friday. That was here on last week Thursday. Last week on Wednesday. Last week on, let me have a look here. Last week on Tuesday. So what you can see all the time for 1 week, if you want, is that when the DAX opens, it sees selling pressure. It's not just today, but over the last days, it's all the time selling pressure, and then you can, you probably say, okay, and then in the afternoon, yesterday for example, but also on Friday, U.S. equity markets come along as the white knight, save the markets, and in case of the DAX, for example, pushed it above, in my opinion, a short-term significant level above 12,530 points here, which is in fact a bullish sign. And nevertheless, the DAX can't really take on momentum here. Today failed to make it back above 12,600 points, the region around the highs from yesterday. And with this said, we should also see, okay, what happens in case that the US equity markets are not performing well / are starting, let's say, normal, without a one-way street, let's call it, where we see the market just pushing higher as yesterday or also here on Friday. But yesterday, for example, we opened stable, even though there was a short-term selling pressure building, and then the S&P didn't just strut through the roof here, but saw some diminished bullish price action at the opening in the first hour of trading when Wall Street opened here. And what happened here, and I mean, we're talking about a pullback in the S&P from something like 10 points, which is not a huge deal. This is nothing compared to the fact that we have an index reading here of over 2,750 points. The DAX pushed aggressively lower yesterday, made new intraday lows, and then was capable of making those losses back and also heading towards the daily highs thanks to the buying momentum which we saw in the US equity markets then. And with this in mind, well, we have to wonder, what if US equity markets do not push higher here? I think chances are growing then that the DAX will see some bigger losses over the next hours of trading, and which will then add to those losses we have seen over European trading hours. So that said, I think that currently the DAX, if you look at it, is definitely relatively weak compared to its US equity market counterparts like the S&P, like the Dow Jones. And so with this in mind, let's see where this will lead us here. All in all, intraday, we're again bearish for the day. Again, we're seeing diminished selling pressure, but there is selling pressure. And we're as long bearish on the intraday basis now, as long as we trade below the 50 exponential moving average on a 50 on a 5-minute time frame here. Probably make it back above that level, even though yesterday, yes, we were capable of making it back, but then there was this push lower again with the US market opening. So it's not necessarily said that if we now can make it back above that level, keep on or hold the level around 12,500 points, that this then results in a attack here of the region around 12,600 points. Now you might wonder, okay, what's the reason for that? Why is the DAX weak? I have the personal feeling, I mean, we could easily bring up it's quite still strong and stable euro against the US dollar, for example. As you can see here, for example, volatility is very low. We didn't make it, nevertheless, above 123.50. Probably we'll see the push today with Powell making some comments, even though I don't I don't really think that this will really happen here. Same is true for data around the consumer confidence, for example, coming from the US, or also there's something around durable goods, I think, which is published. Not sure whether this really can push the Euro USD above 123.50. But again, this is not necessarily that important for the DAX. I probably could bring this up, even though I doubt that really the euro is the main reason, even though we should mention it. We can stabilize above and around 23, which is a quite high level and which is definitely somehow weighing on a export-oriented nation like Germany is. So the thing is that the euro is probably one reason. Nevertheless, probably the main reason is in fact the uncertainty around the political landscape here in Germany. So the Grand Coalition is still not through. The Social Democrat basis is voting for or against this coalition, where they are now currently looking at the contract. I think the results will be or can be expected around the beginning of March, but probably here are some market participants right now preparing for a surprise. Let's put this in quotation marks. I myself have to say I wouldn't be surprised at all if the Social Democrats and their basis says no. So meaning that there is a high chance then that Chancellor Merkel has to run Germany with a minority and is probably about to see her leadership of Germany here. I think it reduces dramatically chances that Merkel will run here as chancellor for the next 4 years, in fact. So, and this said, I mean, at least we have short-term a high chance of seeing increasing volatility here, and probably the selling pressure around European equity markets we see currently is probably a sign of that. So that's one potential reason. The other is probably that if you look at the hourly chart from a pure technical standpoint, well, we're still stabilizing below 12,650 points. So that said, we have a bearish picture here below that level. So this from the lows at the 9th of February here, this is still only a corrective move, and everything below 12,650 points on an hourly chart should be considered bearish. So with this said, I mean, it's not a big surprise. See selling pressure building then, all in all. Let's just see whether there will be a push higher. It definitely needs it needs the help from the Wall Street. Not sure if the Wall Street can really deliver such support when looking at the fact that from last week, Thursday alone, we made nearly, or no, not just nearly, but more than 1,000 points here. So could be that rather sooner or later this momentum at least diminishes a little. Not saying that the market will collapse again, even though I have to say that when looking at this chart, this is my favorite scenario. So seeing high volatility and choppy price action over the next months probably here at an elevated level, and probably then in autumn, late summer, autumn, August, September, probably see another quite aggressive attack at the region around these 200 simple moving average. You can see here in blue. So, and with this said, I mean, chances are high that there will be such a push lower. And if this happens, it doesn't necessarily mean that the overall picture is then for Wall Street, for example, to be considered bearish. I don't think so. So everything above the 200 simple moving average here should be at least considered bullish, and the uptrend here still being intact, even though such a push lower. And looking at the price action yesterday, when the S&P, for example, which is highly positively correlated to the Dow Jones 2 here, just saw a small pullback of 10 points. If this really happens, and there is some kind of nervousness coming up or some kind of risk aversion, if this happens, there's a high chance, I think, that the DAX could see a quite aggressive attack at the region around 11,900 points. And here, again, this yellow line, this is the 200 simple moving average for the DAX. We haven't made it back above this level. This said, it's at least the case that the DAX should be considered, let's say, neutral. So it's not a clear uptrend anymore, and the uptrend is clearly broken once we fall below 11,900 points. If this really happens, and it could happen if U.S. equity markets see some bigger selling pressure building for whatever reason, then here this level could be attacked, and then would mean that we probably will see trouble, or have trouble in general, to make it back above 12,000 points within the next months here. And so all in all, if you put all these pieces together here, I think it makes perfect sense why the DAX currently is not showing some significant strength. And I have to say, somehow I'm a little excited to see whether we can make back those losses from the European markets here. To be honest, I somehow have the feeling that there's a higher chance that there is pressure building now from the US equity markets, and this could probably push the DAX significantly back below 12,500 points, even though that wouldn't necessarily mean we're bearish. It just pushes us back into the trading range here. Everything above 280 to 300 points here, 12,280 to 12,300 should be considered at least neutral. Well, and we still have, by the way, a chance to make it up towards 12,650, probably even higher than that. But all in all, it definitely is a first sign that the market is probably building a potential short-term double top here around 12,600, and that selling pressure is then building in the upcoming days, instead of seeing some further momentum on the upside, and the DAX pushing towards and above 12,600 points here, and duplicating this range as a potential price target on the upside, and reaching that for so that's it on the DAX. In fact, and that's mainly it. That's it. So I have nothing more to add. So currently the Euro USD is spilling some pressure here. We are pushing back towards 123. Not a big deal. Things are neutral, to be considered neutral, between 22.70 to 123.50. I have to say I favor the break on the upside, since I doubt that the US dollar has so much further potential on the upside, even if the US dollar can push here back above 90, and probably push a little higher than 91, and testing the channel trend line here of this downward channel. Well, even then, I still consider the picture overall bearish, and I think that the Euro USD has a good chance to reach the highs around 25.40, 25.50, instead of pushing significantly lower. Sure, this is neutral, but if you scroll out of the chart or zoom out of the chart, you can see it's a clear uptrend, a very bullish consolidation. There's a high chance that we reach this level instead of breaking this. I think, based on the current performance of the US dollar in general, short-term relevant level, I think, is the level here around 123.50 again. So intraday, I made it the topic in the German version of this format. I said Asia breakout systems, for example, probably look for the break here above 23.50 to happen. placing the stop below the intraday lows, and then going for a retest of the region around 124. Not sure whether the words from Jay Powell today, respectively the data from the US coming, will initiate such an impulse. All in all, I think it's mainly technical driven, what we get to see here also in the currency markets with, in fact, diminished volatility. Let's have same is true also for Japanese yen crosses, by the way. So you can see here volatility is quite low. Not sure what to make out of this. If risk aversion picks up for whatever reason, chances are higher that we go back towards 105, 105.50. If dollar Japanese yen can stabilize and make it back above 107.80, probably we will see another more aggressive push back above 108, even though the picture clears up if we make it above 110.50. And that's something where I have to say I don't see this push higher in the dollar Japanese yen right now, mainly based on the weakness in the US dollar. And in fact, that's it. Yeah, so gold didn't make it, or didn't hold the levels yesterday. We've seen around the morning meeting here around 1,340 USD, even though I still consider chances to be higher, that we'll see a retest of the region around 1,360, 1,365 USD per ounce here. Key level here is 1,341, the highs from yesterday. Currently, we get to see the retest around 1,330. If we can stabilize above that level, gold should be considered bullish with further potential on the upside. First, more bearish sign probably if we drop below 1,320. Then there's also a chance of a retest of 1,300, probably a little lower than that, 1,290, 295. But all in all, I consider chances to be higher based on my skepticism around the US dollar. I see chances higher that gold will push back towards 1,360 to 365 instead of testing the region at 1,300 USD per ounce and below that again. And that's it. Happy trading. Watch your stops. Talk to you again tomorrow, 10:30 a.m. GMT. I definitely look forward to it. And that's it from my end. So if you have any questions, please shoot me an email. Please contact me via Twitter. I definitely look forward to it. And that's it from my end. So happy trading. Watch your stops. Take care. See you tomorrow. And bye-bye.